What's going on, everybody? Welcome back to another live stream here to wrap up the week. Happy Friday, guys. We just had non-farm payroll and unemployment numbers come out, and they were stronger than usual. Markets giving a bit of a flip here in terms of what the expected move was supposed to be. So that's a little bit of a wild card. It could be something technical, or rather exposure being covered, or what of the likes, any one of the reasons that you can pick as to why the market is rallying here on the stronger job numbers. For those of you that are confused, remember that a stronger job print is not what we want to see right now for a bullish market. In fact, for this market to really reverse bullish, we want to see unemployment numbers get worse than usual, which means to say head further higher. But we're seeing that number contract instead, which presents the idea that the labor market is still very strong. And if the labor market is strong, then the consensus or the market expectation is that the Fed will have to keep interest rates higher for longer, right? So if interest rates remain higher for longer, that means equities will have a further drawdown period for a sustained period of time. Now, there is also the possibility here that the market is saying, okay, maybe the job numbers are starting to cool down, because it came out just slightly below the average bell curve of the consensus. I think consensus was supposed to be around 200,000, but that was the average number between all across the way. And I think that on the upper end of the consensus was around 230,000 for some forecasts, and then some of the lower ends of the forecast were 200,000. So we're kind of in between here. At 221,000, I believe, or 233,000, something like that. It was in between. So yeah, there could be a lot of reasons why the market is kind of rallying here, but we'll have to see if that is follow through at the market open. The situation continues to be the same, and honestly, we could honestly keep the same strategy we've been playing since the beginning of the new year to play out this market so far. We still are trading within a range, and as long as we stay within that range, you're not going to be able to trade the indices here. It's just not worth the risk until and unless you are either at the top or the bottom of this range. It doesn't make sense to trade this range just yet. So you want to stay away from SPX or SPY or QQQ or whatever it is right now as we are, until and unless we start to get into these upper levels at 3,900, or we get into the lower levels at 3,800 or 3,790, 3,780, this zone. So till then, hold your horses with trading the indices. I think it's not worth the hassle. Won't this pump force market makers to buy shares? I mean, that's only if a lot of people go out into the market and buy call options. What you're referring to is a gamma squeeze. I mean, there is a possibility, but I don't personally think that that would happen in such a short period of time. There's a very high chance that this could have entailed some kind of a short covering, or at the same time, some players taking some upside exposure after not having any upside exposure at all. It could really be anything. It's tough to guess what will happen. But we keep it simple, really simple. 388 is still the line in the sand, or 387 on SPY and 3880 on SPX basically. These two levels are really the key level for the upside, and then the downside level is going to be 380 on SPY or 379 on SPY, and 3800 or 3795 or so on SPX. So as long as we don't get a break in either of these directions, we're going to continue to chop here. Now, there are obviously some other things that are moving. So NASDAQ, it was really oversold pre-market, and it has been oversold in the past couple of days. Also, don't forget one thing. Next week, we have financials that are reporting earnings. So there is a possibility the market is also pricing in a little bit about the earnings that is coming up next week. And they're taking some bullish exposure well into that. Today is Friday. So all kinds of weird stuff could happen. As a result, you can see XLF is actually one of the better performing sectors here pre-market. So almost up 1%. Energy as well at 1.33%, and then technology at 1%. So, you know, quite a few sectors here that are up about 1% on the market internals tab. Now, NASDAQ still within a downtrend and still squeezing pretty hard. So I wouldn't get overly bullish, not until we clear some important levels. And NASDAQ has a lot more room to go to clear those levels before we see further upside. So my advice is to stay muted on not trading indices and concentrate on the individual stocks that you can see that present opportunities to the upside. We are still long financials. I still have a small position on financials here, about $11,000 worth, which will be held into next week. My P&L for the week is currently sitting at $21,000. And I took two losses yesterday, one on Boeing on puts and the other on... one on Boeing on calls and the other on BABA on puts because I was expecting a pullback, and then it ran against me. Obviously stuck to my risk management and cut them pretty short at around 25-27%. So no real problems there. In terms of opportunities today, Boeing continues to rally here, and you know, we've seen Boeing go on this kind of very crazy rally before. It definitely could get up into the 210 and then the 215 region if it sustains this rally. So if you can get a pullback in Boeing, my guess would be it'll be a decent risk to reward ratio to play this at the upside if we can continue to see demand here, because this stock has been on a pretty deep tear. Tesla opens up at 102 today, and just giving you this exploded long-term view here. Very quickly approaching our target of $92, which I spoke about a couple of live streams ago. I think it might have been about 2 or 3 live streams ago. Somebody was asking me where the long-term target for Tesla was and if they should play a bounce, and I said no, because we could drop further and get into this $92 range. 92 is still the important support here before we get some consolidation, and then obviously if it drops further than that, then there's open gaps at $72, etc., and further down over here as well. So in terms of Tesla, we want to definitely not touch this until we see consolidation and yada yada yada. So I would avoid Tesla for the time being. Another one that it looks interesting that I've been seeing a lot of unusual option flow on is Ford Motors. Has been consolidating in a very nice downward pattern. It still has a lot of ways to go before I think this one breaks out. But the upside seems to present itself at around $13 or $12.50, $12.90 around there. And I want to see if I can catch this upward momentum here if it breaks above $12.62 to kind of scalp into the $13 resistance, which is the previous support here. So I'll be looking for that price action move on Ford to play that one. Financials continues to be showing some strength here, so we'll be continuing to play this one to the upside, and then I'll probably clear or rather lighten my position sometime next week and get out of the whole position ahead of earnings, because earnings can go either way. So I'll be out of the financials position before the report of the earnings actually happen. Another one that I'm looking at is Meta. Very strong relative strength across the board for this stock in the past multiple trading sessions. Really looking for a break above that high 129 today to play the upside. First target should be around 134, and then the next target probably around 138, 137. I think 137 is more likely that I'll exit. So there's upside here, possible untapped upside. If it doesn't break this upside here at 129 plus, then I'll be looking for rejections to play to the downside at 120 or so. So that's the plan with Meta. Definitely has a little bit of gas in the tank if it can get that break above 129 plus. Play that upside. Nvidia choppy, semiconductor choppy in general. Not going to touch them, not until pivots are broken here. And then Netflix is the other one that is showing pretty decent relative strength across the indices. So this one needs that break above 314 plus, 314 and change, and does have significant upside until 320, where you could take profits off the table. So this might be a day trade if we can get that break above. Let's see what else here. Apple continues to be a wild card here. I mean, it did gap up a little bit yesterday, sold off throughout the rest of the day. Today it's gapping up a little bit again, and then we're seeing it sell off again. So my guess is, if anything, the market could throw a fit today, and upon having this great buy up, and then it could fall right after that, after people take profits or short again, or we'll have to see how the price action goes throughout the market open. But if anything, there are very few grade A setups right now, and honestly, if you wanted to play Apple short, I would go under 124 into 120 if it can move that far. Microsoft also has a similar move, but it has gapped up to the 23.6 retracement. So you really want Microsoft to reject this level at 224-ish and start heading to the downside, because there is a huge play for Microsoft downside over here. So risk to reward ratio here for Microsoft is a great setup. This is probably the only good setup in terms of risk to reward ratio. And the other one is Netflix, which has about a 1:2 risk to reward ratio for the day trade. Meta, not so much, but if it breaks and starts rallying, then yes, it will. So it kind of just depends on the momentum and how much of spark we can get. Yeah, that's all I have for you guys. Any tickers that you guys want me to go through today? Also, next week we'll have a bunch of economic news again. So CPI will be coming out, and then there'll be a lot more news on earnings as well. URI thesis: buying shares this year, anticipating more onshoring, construction, spending, infrastructure. Oh yeah, there was just a bill about that, right? I think Biden is looking into infrastructure spending right now. URI. Let me have a look. United Rentals? Is it United Rentals that I'm looking at? Oh, this looks nice. Oh yeah, this does look nice. Oh, I like this one. Yeah, I like this. This is, from the technical perspective, I think this is a nice looking chart so far. If we can get it that nice clean break above 374, then obviously the retest of 415 is going to be imminent at some point. We'll need to see that continuation and consolidation of demand. Let's have a look at some of this volume as well. Where is it? There we are. So that major level of demand came in at around 318. We're seeing these levels are actually quite thin up here in terms of demand. Obviously up here is all uncharted territory. So yeah, I really like this. I think if it can break above 373, I think it's a good one to hold for you know, the rally into 414 for the retest here. This will not be a guaranteed break above, so we'll have to see what it does here pretty much in the future when it gets there. But this stock does move pretty slowly as well, so you're going to have to be very patient with it. If you're going to play a swing trade on this one using options, make sure that you go at least 90 days out. Like, you need 90 days of time on this. So it might be an expensive contract, but it might pay out. So that would be my 2 cents here. Risk to reward ratio wise, you can get away with at least a 1:2 risk to reward ratio here. If you go risk off at around 343, and you take that upside to about 416 or 415, you will get at least a 1:2 risk to reward ratio between here. So I think this is a decent setup. It's a good one. Oh yeah, I'm drinking some tea. Thank you so much, Rich. Teladoc. Okay. This one was a COVID sweetheart, right? It went crazy. Yeah. This was the stock that went hand in hand with Roku. I remember this one. It was traded like crazy. What's your thesis behind this one, Jonathan? And Lululemon, I think they had an inventory problem. That's what they got sold off for. Still a very decent stock. Lululemon for the upside, I think might be okay. It needs to clear this 337 level first though. So I wouldn't do anything until it clears there. 337, if it can get up there and start bouncing above that level, I would be comfortable with taking some upside here, possibly into the 355 first and then the 375 later. So I think risk to reward ratio wise, this looks like a good swing trade. It's a possibility. But if you start rejecting at the 337, this will be a reversal play back down into the 61.8 retracement, which is the $300 level. So you have to be really careful with Lululemon. With Teladoc, honestly, when I just look at the chart, it just I wouldn't want to play this. I know you are thinking to short it, possibly, right? You're probably thinking to short this one, but it's sold off to like the core of the earth already. I think the downside on this is very slim. Unless you're talking about the upside, and then in that case, I would say probably not a good idea because the stock probably doesn't have decent fundamentals. I don't think it does. 3 billion market cap as well, so it's pretty prone to being manipulated. Remember, less than 10 billion makes your life difficult. I would stay away from T-Doc, but Lulu is a decent setup, and you can play it both ways. So with Lulu, you just want to wait for that confirmation above 337, bounce. If demand continues to come in, you can play the upside at 355. Don't expect for the whole gap to be filled. That would be a poor choice made if you're looking for the entire gap to be filled. So don't do that. Watch for the rejection. If you reject at 337 and you start coming down, you start getting below 329 or even 328, then you can start to take some short positions down below 325. And then played the $25 move down into 30. Oh, not the 25. $17 move down into 308. That would be my plan with Lululemon. Okay. Any other questions? Any comments, concerns? We are about 4 weeks away from launch of EJA's flagship course. I'm going to be obviously coming to you guys with more details as we get closer to launch, or relaunch, should I say. I'm really, really excited about it, guys. And once again, I want to thank all of you guys for being here. Make sure you hit that subscribe, like, smash the like button. It helps me out a lot. I've been in put swings for the past 3 months. I'm exiting the last of my contracts. Is that on Lulu or T-Doc? I think T-Doc, right? Oh yeah, you meant T-Doc. Yeah, for T-Doc, that's good. You should probably exit the last of them. For Lulu, was going to watch 337, 340. Yeah, that's exactly the level that I just told you. So 337 is a decent level for you to watch. For the rejection, thanks for the confirmation. Yeah, no problem, of course. Para, small position builder going into election year next year. Huh. What is Para? Paramount Global, is this the one? Is this the one? Holy moly, what the heck is this? What is the market cap of this thing? 12 billion. Wow, what the hell happened to this? Why did it go like crazy and then sell crazy down? Oh man, when I look at stuff like that, this gives me the shiver me timbers. Anything that moves like this, oh man, you gotta be careful. What the hell happened here? Does anyone know? Was it a merger, or was there acquisition or something, or was it dilution? I don't know, man. I would ignore this one. Personally, if this chart looks like this, it looks like a red flag. That weekly chart looks pretty disgusting too. I mean, from the technical perspective, it looks like this area here, the $10 all the way up to 16 or where it is, looks like a demand zone, but it's free falling right now. It looks like it has a little more room down to go, which it is trying to get to. So it might consolidate and then fall again, get back down to $10. That looks like what it's trying to do from the technical perspective. But I don't know anything about this business at all, so I really wouldn't be able to guide you accurately. If you just want to hear my opinions from a technician standpoint, I think that it doesn't make sense to trade this. Just the way that this looks like market manipulation right here. This is market manipulation. So yeah, I would avoid this personally. That's just my 2 cents, man. All right, that's all I have for you guys today. I appreciate you guys tuning in. Once again, we'll see you back on Monday. I think it was a short squeeze from a hedge fund back then, if I recall. Okay, gotcha. Yeah, that would make a little more sense, I think, if it was a short squeeze. But the chart looks nasty. I still, if it has the capability to be short squeeze and stuff like that, I wouldn't want to trade it. Like, I don't want to trade such a volatile stock like that. All right, guys. Have a good one. Peace out. Love you all. Thank you for stopping by, and I'll see you all on Monday. Gonna try and keep this one short. And yeah, if you have any other questions, put them in the comments. I'll answer them in the next stream. If you want, to ask me questions during the market hours, we have that Telegram group that I posted on our IG story. It's a free group. You can join it. You can ask questions there. I've kept the channels open of communication so you guys have access to me. So till next time on Monday, peace out, and yeah, we'll see you then. Bye bye.